Good morning, everyone, and welcome. Thank you very much for joining us this morning in beautiful Brooklyn and elsewhere around the world. My name is Zachary Goldman. I'm the Executive Director of the Center on Law and Security at NYU School of Law, and I'm incredibly grateful to have worked over the last couple of months with NYU Poly's Computer Science and Engineering Department in the development of this program. The department chair, Nasser Memon, his colleagues, Bob Ubel, Jay Vanderwerken, and the entire Sloan team, especially Elaine Cacciarelli and Sarvanaz Bakhtiar, have been incredible partners and friends in this endeavor. And it's a huge honor to be here today with our keynote speaker, Peter Hancock, the president and CEO of AIG, and to welcome this morning's other guests. There is literally no group of people better suited to help us think through the myriad challenges facing private companies than Gus Coldebella of Fish & Richardson, who will join us momentarily to help frame the day's events. And the panel that will follow Peter's remarks, comprised of Joe DeMarco of DeVore & DeMarco, Tom Finan of the Department of Homeland Security, Judy Germano of our own center at NYU School of Law, Cam Carey of Sidley Austin and the Brookings Institution, and Randy Milch of Verizon, have together decades of experience, not too many decades, just the right number of decades, in government and in the private sector addressing cybersecurity concerns. The topic of today's discussion is cyber insurance and corporate governance. And it makes sense to join these two issues because effectively managing risk is critical to making great strides in how we as a country address today's cybersecurity challenges. Managing risk is about assessing vulnerabilities, identifying the assets you have that can be held at risk, valuing those assets, assigning probability to the likelihood those assets might be targeted and compromised, and understanding the consequences in a dynamic and interconnected environment when disaster strikes. Effectively managing cyber risk, then, depends on taking the outputs of this analysis and designing systems and processes to protect valuable information. All of this must take place before you have gotten to the task of designing response and incident management plans. It's about understanding where your vulnerabilities lie, how they can be manipulated digitally, and then minimizing your exposure. And there can be no doubt about the strategic importance of private companies getting this right. The overwhelming majority of critically important infrastructure in this country is owned by the private sector. The private sector must ultimately implement almost all of the protections and changes needed to improve our resiliency, and private companies themselves have an enormous amount of the information necessary to improve our general approach to cyber preparedness. And this is fundamentally what cyber governance is about. It is the core of our focus on cybersecurity matters at the Center on Law and Security, and this process of identifying data or information that's important, assessing the likelihood it will be harmed, placing a value on it, and determining the consequences if a destructive event occurs is fundamental to the way that insurance markets price and transfer risk. Insurance markets have developed to help manage other catastrophic risks like terrorism and natural disasters, and they are in the process of being developed in cybersecurity. We are honored and delighted that Peter Hancock was able to join us this morning to speak about some of the factors shaping the development of the cyber insurance market. Peter is one of the leading thinkers about risk in the financial services industry. He has served as the CEO of AIG since last summer, having come to the company in last September. He has had a distinguished career in the financial services industry, including for 20 years at JP Morgan, where he ultimately served as the chief financial officer and chief risk officer of the firm. Before we turn the podium over to Peter, it is a distinct pleasure for me to introduce Gus Coldebella, who will help contextualize some of the cybersecurity pressures that are currently facing boards of directors and significant corporations. Gus is an accomplished public servant, having served as the Deputy General Counsel and then Acting General Counsel of the Department of Homeland Security, and we have the distinct honor and pleasure as having Gus serve on our Board of Advisors at the Center. So thank you all for coming this morning. Let me turn the microphone over to Gus Coldebella. Thank you.
Thank you very much, Zach. It is my pleasure to be here today to give you some comments about the theme of today. I think one of the things that underlines just what a multidisciplinary issue cybersecurity is if you look around this auditorium. We have corporate executives, insurance professionals, government policymakers, law enforcement personnel, lawyers, CISOs, computer scientists, technologists, academic researchers, and I'm sure I've missed many more. This underscores a central theme, which is that cybersecurity is a team sport. We can't go it alone. It'll take the concerted effort of the private sector, government, academia, and others to address the thorny questions that we're going to wrestle with today. When thinking about these issues, I'm often reminded of an old joke about two campers sitting by the campfire when a bear bounds out of the woods snarling. One of the campers jumps up and starts running away, and the other camper says, "You can't outrun a bear." And the first camper says, "I don't have to outrun the bear. I just have to outrun you." Now, there may have been a time when we could afford to be like the fast camper, just having our security a little better than our neighbors, so the attackers go after them rather than going after us. But there are a lot of bears out there, and their numbers are growing, likely in proportion to the amount of incredibly valuable things that we as a society are putting online, from vast troves of personal data to our intellectual property and our business secrets to our critical infrastructure, and with the Internet of Things, control over our thermostats, our home door locks, and soon our automobiles. According to last year's Ponemon report, nearly half of all U.S. companies were on the receiving end of a cyber attack. So what can we do? The object of today's discussion is to figure out ways that companies, their management, and their board of directors can face these threats and minimize risk. It's a timely and important topic. Those of us who practice in the cybersecurity area have advised for years that cybersecurity is not just a server room issue, but a boardroom issue. Notice as I stand here in the Polytechnic School that I'm not saying it's only a boardroom issue. It is certainly also a server room issue. But the questions that are presented are strategic. If there's one success that we can claim after 2014, which some have dubbed the year of the breach, it's that boards of directors are taking this advice to heart. Why? Because the questions raised by the specter of network intrusion are primarily strategic. They involve not only the primary risk of the company's or its customers' data or systems being accessed and manipulated, but oftentimes dire secondary risks. Just some of them: litigation of various types, regulatory enforcement actions, public company, stock drops, often significant costs of remediation, and really most importantly, the accompanying effect on a company's reputation and goodwill that arise after such an incident comes to light. A little bit more about the litigation. Plaintiffs' lawyers are infinitely creative. We have seen many suits related to private information and PII being released. But in the wake of last year's breaches, we have seen different kinds of cases, and cases that are very interesting to folks who are sitting in boardrooms. We've seen 10b-5 cases related to stock drops. We've seen what we call caremark claims, which are derivative claims under Delaware law that seek to hold directors and officers personally liable for failure to properly oversee the company's security function. While companies can limit a director's liability for breaches of the duty of care, they cannot do so for breaches of the duty of loyalty, which is what caremark implicates. If they ignore red flag risks, and plaintiffs will allege that cybersecurity is one of them, then the caremark line of cases kicks into effect. In addition to litigation, we have regulatory risk. The FTC recently announced its 49th data security settlement, and they said that there were more to come. The SEC has become a player in this area, using its authority over public company disclosure obligations to make sure that public companies' Ks and Qs contain what they consider to be a sufficient description of cyber risks and whether any of those risks have come to pass, whether the incident is considered by the company to be material or not. What's the good news? The good news is that while companies can't prevent plaintiffs from suing and regulators from investigating, they can mitigate these risks, in part through good corporate governance practices. And it's not that great a leap. Boards of directors from time immemorial have been thinking about how to oversee company management to make sure that they're adequately addressing the risks to the corporation and making sure that levels of investment are set appropriately by the company to minimize adverse effects, and making sure that the company has a plan in place to, in case one of those risks comes to pass. Part of today's discussion is try to answer the question of risk. Some humble suggestions, and Zach mentioned this. Companies should think about adopting a security plan that's tailored to the company's specific risk profile and review those and assess those risks systematically on a regular basis as needed. This is not a set it and forget it. Instead, the plan needs to be dynamic and it needs to be frequently exercised. Companies that don't have a CISO should probably think about getting one, to have someone who is thinking about security issues as his or her main job all the time, as well as engaging technical experts to conduct regular assessments and to educate officers and board members on data security. Boards are thinking about restructuring themselves, either to make the audit committee the audit and risk committee, which would include cybersecurity, or in some cases having a separate committee of the board to think about these issues from a corporate governance point of view. I focused on what the private sector can do, but just a few sentences on what the government can do as well. There is a perception among some that the government has a bit of schizophrenia right now about cybersecurity. You have agencies of the government, such as my old agency and Tom's agency, the Department of Homeland Security, the FBI, and the Secret Service, that help the victim of cyber attacks. You also have some agencies, and I mentioned the FTC already and others, that have a more blame the victim stance toward victims of these crimes. Now, I'm not denying that there's a role for regulators in cases of neglect, such as when a bank leaves the safe deposit boxes unlocked. But in most cases, the company is and should be considered to be a victim of a crime. Just because the lexicon suggests that this is a cyber theft instead of a theft should not mean that the victim, rather than the perpetrator, should be held responsible. One other orienting statement about what the government has done. The government is at its best when it exercises its core functions. And one of them is evident in the NIST framework that was issued about 18 months ago. Another is to look at what the President did yesterday with regard to sanctions for foreign entities that are engaged in cyber theft and cybersecurity issues. What we have to be cautious about from a public policy point of view is overregulation in this area. And I think we're off to a very good start with the non-prescriptive guidance that NIST has issued. But regulation has sometimes the unintended consequence of overemphasizing certain things over others and causing stagnation rather than dynamism in security issues. One example of this is that 46 or so states have laws that require the disclosure of breaches that involve private information, and that has caused what I consider to be an overinvestment in that area versus investment in the security of other key important things that companies have in their systems, including intellectual property and the communications about M&A transactions and the like. To return to the initial theme, cybersecurity is a team sport, and I'm very proud of NYU for taking an interdisciplinary approach to these thorny issues with NYU Polytechnic, the Law School Center for Law and Security. Putting these together, it puts NYU on the cutting edge of policy and practice in this area, and for that, I commend the institution, and I'm proud to be associated with them. I'm looking forward to a lively discussion today. And now, I'm very proud to deliver the keynote address, the President and CEO of AIG, Peter Hancock.
Good morning, everybody. Thank you, Gus. Thank you, Zach. This is a distinct pleasure and quite an intimidating audience. Never have I spoken to a group with such an asymmetry of knowledge of a topic. But I think that this is typically the case in a world of greater and greater specialization, where we all sit in our silos, and this team sport that Gus refers to requires us to reach across these boundaries. So those of you who are deep experts in this area, please forgive this newbie who has been forced by my new job to learn very fast how critical this topic is. But what a fun job this is. I feel incredibly privileged to have been asked to do this job last September. And one of the reasons is that at AIG we insure a very broad range of risks. And that means that anything that goes on in the world is of interest to us. And this is an area in terms of risk where the activity is just growing exponentially. So what can I add to this discussion today? I think I can probably help by putting this risk in the broader context of other risks where insurance has provided a helpful role, and then speculate a little bit on where it's heading. So I'm going to look a little bit at the general topic of insurance and society, but also then just drilling down into cyber insurance specifically. What is the fundamental purpose of insurance? Why has it been around for so long? To answer that question, I sort of looked back a little bit in history. And I had a great pleasure when I was visiting one of our 90 countries that we operate in, and it was in Italy, where the general manager took me to a place which I thought was a very geeky spot for an insurance geek, which was the Museum of Insurance. That such a thing does exist. And in the Museum of Insurance, I found a policy dated 1670 for marine cargo from Genoa to Cadiz. So what was it that led somebody to design this contract in 1670 that was so useful? Well, it's fear. It was fear of piracy. And the enduring need for insurance is the enduring human sentiment of fear. And so the purpose of insurance, broadly speaking, is to reduce fear of the future. And why is that so important? Famously, FDR said, "We have nothing as a society to fear but fear itself." And that fear inhibits so many things in life. Whether it's fear of outliving one's savings so that one doesn't finance the education of your grandchildren, or whether it's fear of expanding into a country, either for your supply chains or your export markets, because of fear of political risk or instability in those countries, or piracy, which still exists to this day. Or whether it's fear of embracing the big data revolution and the economic opportunities and innovation that can come from that, for fear of the consequences of cyber breaches. So there's this common thread throughout history of how fear inhibits growth in societies, economic growth and personal actualization. So I think that insurance plays a critical lubricant role in societies around the world. Now, let's quantify that for a moment. In developed societies, that's about 5 to 7% of GDP is spent on insurance. But in most emerging economies, it's less than 0.5%. I believe that's a tremendous opportunity if the positive aspect of insurance as a risk mitigant, as a mitigant to fear, can be embraced by societies where there often is no government safety net. So the role of insurance by mitigating fear can promote growth and sustainability in many, many dimensions. So what does a company like AIG, which by many measures is the world's largest insurer, despite many, many divestitures, to repay the government in full with a profit. What do we have to add to this? What is it that makes us useful in this debate? Is it because we're smarter? We have better experts in this area? I don't think so. It's more a form of collective intelligence. We have 90 million customers in 90 countries, many of them who've been with us for decades and decades. We pay out about $134 million every day to people who've had something bad happen to them. Whether it's a lost suitcase and it's $50, or Superstorm Sandy, where we paid out over $2.5 billion, or every one of the cyber breaches that you've read about in the newspapers. Yes, we were on each of those. Or whether it was, this is my first and only one, the meteorite shower in Siberia that happened 2 years ago, where we were insuring the warehouses in Siberia that got hit. So there's a collective intelligence that comes from this community of clients that we have, where we become the venue for the exchange of ideas and best practices. We collate data, we analyze it and look for signals in that noise. And our ability to share that generously with our clients, our 90 million clients, whether they be institutions or individuals, we think is our contribution to this rapidly changing area where we have to acknowledge the need to keep on learning. We need to learn together to stay ahead, in Gus's word, of the bear. The bear is running faster than we can. It's an exponential threat, and if we're not careful, our response is simply linear. How can we make our response geometric? It's through collaboration on a scale that we've never attempted before. I think we can be a catalyst to help that. But this venue is a great chance to reach out across boundaries that we haven't before. So how exactly does insurance really help? To give you a sense, again, of scale, we insure about 20,000 companies in this country against cyber. We also insure about 22 million individuals against identity theft. So in a very tangible way, we're helping in that way. But to me, we can only just look at the scale of this. The amount paid for insurance on cyber today is less than 0.5% that's paid for other types of risk, which doesn't feel proportionate. So it suggests to me there's a tremendous lack of awareness of the scale of this threat and a lack of awareness of how insurance can actually help. Now, perhaps it's the insurance industry's fault for designing policies that are either not really scratching the right itch, not quite designed to the right coverage, or people just perceive it as too expensive. Now, most people view most insurance as too expensive until after their house burns down or something bad happens, at which point they're incredibly grateful that they have it. So there's a sort of psychological bias against insurance. So it's not surprising that the biggest insurance markets of the world are the ones that are mandatory. You can't drive a car without auto insurance. You can't take out a mortgage and buy a house without homeowners insurance. Now, at this point, cyber is not a mandatory item. Should it be? I'm not sure. But it's probably something that people should be forced to disclose as to whether they choose to use it or not. And that might, I think, create a bigger market, a more transparent market, and a more affordable market. Because any market has certain fixed costs which come down as a proportion of each policy if there's broader adoption. So I think broadening the adoption of cyber insurance is going to be a good thing for society, good thing for our clients. But I also think that we need to broaden the coverage. Historically, the risks that were covered in a typical cyber policy were very narrow. And more recently, about a year ago, we expanded them to include physical damage and bodily injury. Because in 1999, when we first started writing cyber insurance, never imagined that you could use a cyber attack to cause physical damage. or bodily injury. And Stuxnext really told us all how much more damage can be caused should you choose to use that avenue. So whether it's utilities or other critical infrastructure users that are starting to see insurance as a helpful adjunct to their other ways of dealing with risk, we also have another very important role. Through the way we price insurance, we nudge people to alter the way they manage their risks. We reward mature infrastructure. We reward mature governance with lower rates, larger coverage. The largest coverage that I'm aware of is for a bank that has about 400 million of coverage, which is actually very small when you think about it. So the amount of capacity that's available for any one institution is still very, very small. And I think that's a fear of whether the maturity of the countermeasures are really where they need to be. You know, when we compare it to the amount of capacity that's available for a complex chemical plant, refinery, offshore oil platform, the numbers are much, much higher. So I suspect that over time, the willingness by insurers and the industry in general to provide greater capacity will increase with greater comfort. With the maturity is there an important contribution. It's just through loss control and advice. And here I'll use an analogy. We've been insuring against property risk for decades and decades in complex industrial properties around the world. And we have hundreds of engineers, both field engineers and specialized engineers that provide catastrophe modeling and advice on how to make buildings more resilient against flood, quake, wind, and what can be done in the location of a new plant, the construction methods, and then the ongoing monitoring to minimize those risks. Now, there are plenty of consulting engineers out there, whether they're working for the brokerage industry, the insurance brokerage industry, or just independent consulting engineers. Now, how does the advice that we provide differ from them? Well, ours is not objective, theirs is. Ours is partial. Why? We have skin in the game. If we get it wrong, we lose, and we sometimes lose a lot of money from insuring things that we don't understand. So we need to work together with our clients and use the insights that come from the very practical experience that we have of incurring losses of a very diverse kind in the way in which we provide that advice. So the advice is inherently pragmatic. We're looking for indicators that have a material effect on outcomes that can actually matter. So it may not be as objective, but it's certainly well informed by the pragmatic experience we have of having experienced loss. And we need to be constantly revising it. We were huge supporters of the design of the NIST, the NIST framework. We think it's a terrific start. NIST version 0. But the pace of change requires a constant refinement of that. And so I think that there needs to be an acknowledgement that certain things move faster than others. And again, I'll use another analogy. And I'll focus on an area that is a huge public health problem in the world that's often overlooked because we're so lucky in this country that it's been largely dealt with. And that's road safety. Road safety or traffic deaths is the largest cause of death in China for 20 to 30-year-olds. And you look at what has the world done to deal with traffic accidents around the world, and what can we learn from that in this case? Well, they designed a driving test in this country, I think in 1949. Hasn't changed a lot since then. There are drunk driving laws. There are seatbelt laws. There are speed limits. And then, of course, the enforcement of those 4 laws. And statistics show that many of those steps have, like the driving test, has 0 statistical prediction on people's accident records. So you have some of those, like drunk driving, which has had a huge effect, seatbelts, huge effect, complemented by the insurance industry, which has innovated to provide additional nudges towards safer behavior. And here I will applaud one of our competitors, which is Progressive, who has done tremendous innovations with their telematics, where they monitor every single touch of the brake, every single turn of the wheel, every time of day that you drive in a difficult area, and reward safe driving with tremendous discounts. Now, what's interesting there is they're not simply splitting risk between good drivers and bad drivers. There's evidence to show that bad drivers become better drivers by virtue of that feedback loop. So I think there's a tremendous dynamism in the way insurance can respond to risk that complements government regulation, which is inherently a little slower to adapt, consensus building around what minimum standards are needed. So the two taken together can make a really big difference. Now, I want to touch on another area around fear, because as I said at the very beginning, the fundamental contribution that insurance provides is the reduction of fear. So fear can be founded or unfounded. And my favorite example of unfounded fear revolves around the Twin Towers. When the Twin Towers came down, the number of people flying to their destination plummeted in this country. And the number of people who drove to their destination increased. And as those of you in the audience who are actuaries know, it's a lot more dangerous to drive than to fly. The incremental deaths that came from that incremental driving exceeded the total number of deaths in the Twin Towers. That's a great example of unfounded fear. And so as we think about how to manage this risk, we need to understand what aspect of cyber risk is founded and what is unfounded. There's a lot of myth. And we can cost a lot of lives, and we can have a huge opportunity cost in terms of growth, innovation, if we allow myths to persist and real facts to be buried in the noise. And when I look at the opportunities that arise from the cliched big data, how do I try and understand it as a business leader? I have been hearing for the last 25 years about the huge promise of interconnectivity. Everything is interconnected. Now, there's tremendous benefits from interconnection, no question about it. But have we embraced interconnectivity way too readily? In a world where I can buy a drone at Brookstone for $100, which is semi-autonomous analytical capability that doesn't require interconnectivity at all, other than to its controller. And it's a reminder that with the miniaturization of processing power, more and more can take place at the edge. We don't have to centralize as much data. And sure, there's some problems that require centralization. There's no question in my mind. But does everything have to be as centralized as it is? I think there's an important data architecture question, which is also a business architecture question, of whether you pool everything in a huge data lake and then decide how you're going to use it later, or do you start the other way around? What is its purpose going to be before you decide what data gets aggregated where? And I think too often that decision is not being made by the right people in organizations. It's a truly integrated decision of technologists and business people. And if I look at our business, for instance, we insure millions of cows in India, microinsurance. But we also insure satellite launches. I'm not sure that the cow data and the satellite data really needs to be integrated. Really. But many advisors in this space argue that all data in a large enterprise needs to be interconnected. And we need to understand what the benefits of that are versus the costs and the risks of interconnection. And likewise, when we look at the target breach, who would have thought that air conditioning system, the HVAC system, would be the back door in? You know, do you really need to have a centralized control over all of your temperature controls, or do you rather have that local? On a cost-benefit analysis, I think in hindsight, maybe local would have been better. So I think there's so many areas where this sort of strategic thinking about data architecture, what needs to be local, what needs to be centralized, what needs to be connected, what needs to be autonomous, is a really interesting issue. And it touches on another thing that I had never really thought deeply about until I was kindly invited to speak at the White House Summit on Cybersecurity in Stanford about 6 weeks ago, where I heard a very heated debate between President Obama and Tim Cook at Apple around encryption and whether full encryption was the way to go or sharing. And as I listened to that, I couldn't help thinking that there's a lot to be said for full encryption. But it does present huge challenges to the agencies that were mentioned earlier, the NSA and the CIA and their counterparts around the world. But I can't help wondering whether over the last few years, the last 20 years, we've taken for granted the ease with which we can use technology to track bad guys and underinvested in human intelligence on the ground. And that by leaving back doors open everywhere, we have created a bigger problem than we have solved in the first place. So I think a proportionate understanding of the benefits of leaving back doors open versus encryption is an important challenge we have to face. I have another few thoughts on how the future of this sector may evolve. And that's really around how we can apply insurance in a much easier way to think about the holistic view of risk. We've subdivided risk into so many categories that I'm reminded of the drunk that comes out of the bar, stumbling, and is looking for his car keys. And the passerby sees the drunk under the street lamp and says, "Why are you looking for your car keys here?" So that's where the light is. And risk does not respect where there is light. And yet the whole risk profession, whether it's chief risk officers or the insurance industry that insures against individual risks, is tempted to insure what's easily quantifiable, easily identifiable. And that, I think, leaves a lot of dark areas between the street lamps. So as I look at how we can deal with that space going forward, we need to think more broadly. To use Gus's earlier comment, it's a team sport. We cannot attack this risk by risk, and we can't provide products that are narrowly targeted to deal with risk one by one. We need to think about the risk more horizontally across categories, which also raises the issue of geography. This is not a US issue. This is a global issue, and so much of the response has been national. We are an international company. We were founded in China. We operate all around the world, and our customers need us to be there wherever they are around the world. And too often we demonize foreign governments when, from what I can tell, this is an issue of collective concern to governments all around the world. And I'm a huge believer in international collaboration and cooperation, And even if there are state actors in some countries that wish us ill, I think that the greatest threat comes from what has been termed privateers, people who are out for profit and will sell whatever they have in terms of cyber gains to state actors or whoever will pay the highest price. So I think that among unfounded fears is to caricature any one government as somehow more threatening than any other, as opposed to recognizing this is a pervasive threat to all governments everywhere, and that we need to work together with foreign governments much more than we do today to deal with something that's a threat everywhere. So for those of you who are considering future careers, I can't think of any area which shows more promise of opportunity to solve a problem that has deep societal needs, where solving it will reduce fear of the future in a way that can empower people and institutions all over the world to embrace innovation, to grow in a way that can realize our full potential as a society. So a very satisfying area to apply your technical skills, your legal skills, your general problem-solving skills. And so I encourage those of you who are deciding which career direction to take to explore this area, whether with us or others in this field who we work with as partners. So I'd like to take some time to answer questions from the audience. If you have any questions, I'd love to take them. Yes.
Thank you, Peter. It was a great talk. You touched on this tangentially. Some people feel that artificial intelligence is the single biggest existential risk to humanity in the next 20 years. Is there a role for insurance?
Well, there are many things that have been billed as existential threats, including nuclear. And as the proud husband of a particle physics PhD, I'm a big believer that there's a lot of unfounded fear about nuclear power. And I view it as a critical part of the solution to many of the climate change issues that we face. So when it comes to artificial intelligence, as another existential fear, I don't think we should be as fearful of it as people are. I love the story of the Kasparov-Watson chess battle, where at the end of that battle, we could have all thrown our hands up and said, artificial intelligence wins, humanity loses, let's give up the game of chess. But no, we have a new form of the sport designed, which is team chess between a machine and humans. And from what I know, the human-machine team beats the machine every time. Every time. And I see the same is true in artificial intelligence generally, that it increasingly takes care of the aspects of human activity that humans are least capable of doing, and frankly, least interested in doing. And when you pair people with the right machines, they get to do much more interesting things and achieve much more for humanity. So I am a big believer in the positive aspects, but like any innovation, unintended consequences come with it. So we need to be aware of it. And as insurers, we insure more aircraft in the world than anybody else. And last time I checked, most airliners are full of artificial intelligence. There's a great case study of the Air France crash, the flying from Brazil to France in Vanity Fair about 6 months ago. There's a great story on that, where the irony is that the autopilot switched over to manual. when the airspeed indicator froze up. And the pilots did so little flying of their own. Despite thousands of hours of on-paper flying experience, they did approximately 5 hours actual flying per year, that their instincts were all wrong to control the plane. And that if the autopilot had just simply stayed on and extrapolated from previous airspeed indicators, the plane would have survived, because the pitot tubes would have thawed and we'd been okay. So it's a reminder that the right boundary, human-machine boundary, maybe has to move as the artificial intelligence gets better. But as we insure aircraft and other devices that are embedded with a lot of artificial intelligence, this provides, I think, a lot of challenges. Is it a product liability problem or a human error problem? And how do we categorize these in a systematic way? Thank you. Yes?
You mentioned some of the limits of objectivity in this type of insurance. What I'm interested in are what kind of metrics are there today to make, if I'm a company, my premium lower, more likely to have greater coverage. How do they measure it, as well as from a payout? Is it always going to default to a reasonableness standard, whether it's in a payout or if it ever gets litigated, or do you see a scenario where there could be metrics based on number of breaches, data collected, and so on and so forth? What's the state of play right now, and where do you see it?
I think it's in very much of its infancy, and in the underwriting stage, we have our own underwriting form that started out with an exhaustive interview and questionnaire that got slimmed down as it was clear that half the questions had zero predictive power and massive client irritation power. So getting that right, because there's an overhead in the process that comes with complexity. So keeping it as simple as possible, but as complex as necessary, as standardized as possible, and as customized as necessary. So the NIST framework, for instance, is a core minimal requirement to get the most preferred rate, but it's certainly not an exhaustive examination of the governance. And then obviously at the time of claims, each litigation event provides greater clarity on precedent setting and coverage clauses, and over time that will evolve, but we're still at the absolute infancy of this sector. And if we look at how much is spent every year on litigating quite mature areas of insurance, it's a reminder that this is decades before it's really clear where exactly this can be clarified in terms of what's covered, what's not, and how the products will be designed to address these gaps. So I see it as a rapidly evolving area, but it's still early days, very early days.
The next question.
Oh, wait. And I have a question right now from the remote audience. From the perspective of an insurer trying to mitigate these risks, how much does it make sense to try and go after the privateers that perpetrate these crimes?
I love the idea, yeah. So there's plenty of precedent of so-called subrogation in insurance, where when losses incur, we go after the ultimate causes of that loss. And in the case of another precedent, which is workers' compensation, we provide more workers' compensation insurance in New York State than anybody else other than the state of New York. There's a huge amount of fraud in this area. We work together with the FBI and others to go after the bad guys. It's actually very expensive to do that. It's not a money-making proposition for AIG, but it sets a tremendous signal to discourage others from committing fraud on that level. And it's a major source of loss to society, to have almost 3 to 4% of total insurance costs bled away to fraud. And so I would expect that this is an area we'll see more and more actions where, working together with the authorities, we root out the perpetrators in a way that discourages people from doing it.
Peter.
Yes.
Good morning.
Morning.
You touched on team teamwork and workforce development. I'd like to ask you if you could maybe expand some thoughts. There's no doubt that NIST and its critical infrastructure is advancing greatly, and NICE, the workforce framework, is also advancing. Two quick questions. What can be done in your eyes in terms of bringing up the next generation workforce to address that? Because the need for talent and skills and the lack thereof, the war for talent, we have the infrastructure but not the people. And then from an insurance perspective as well, internally, what can be done to help understand better the proficiencies of the skills of the folks that are dealing with this? And does that play a factor in insurance?
It's a great question. I'm not sure that I have all the answers, but one thing I'm sure of is that the workforce development comes in very different forms. So let's just look at two big buckets. Old farts like myself, and we need to really embrace the lessons that we can learn from our kids and the younger members of our workforces. And we need to really go back to school, as it were, in so many ways, mindset of lifetime learning. The flip side is those kids need to understand the costs and benefits of sharing everything with everybody. With anybody with embarrassing Facebook posts can speak to. But the culture of openness of the younger generation needs to be adapted as they enter the workforce. And as we sort of try and get the right balance between having a totally locked down environment when you get into the building or you work from home versus something which gives people more flexibility. And so I think it's a real intergenerational exchange of ideas without sort of lecturing each other. I'm struck very much at how much we have to accept that there's no such thing as perfection. You can really make perfection the enemy of good here. And the cliche is that if you have a password that you train people to change every week, you know that it's going to be written on a yellow sticky note on the back of their device. And so, the net reduction in risk is negative. It's got worse. And so how do you integrate the human dimension with the technological solution to get the optimal, recognizing you'll never get to 100%? And the training of the workforce is one part of it, but the other thing is to make technology much, much more user-friendly. Biometrics is not perfect, but it has a higher compliance record than passwords, so we should be using it much more. And so I think that these are ways we can sort of iterate, I think, to something that leverages the insights that come across the workforce, senior, older and younger, as well as technical and non-technical. You speak to somebody who's a deep IT expert and they have one answer, and then you look at somebody in the field that's actually out there interacting with clients all day, and you realize that many of the solutions proposed are utterly impractical, and so they get ignored. So we need much greater cross-collaboration between functions and between generations, would be my simple answer to your question. Yes?
Peter, Steve from Intel. So just checking if insurers offering insurance in this space, are you seeing the need for additional services as part of the insurance on the remediation side? Do you have, is that something that an insurer would offer?
Absolutely. In fact, I would say that the value proposition of insurance is more about that than the financial capacity. Yes, we have the financial capacity to share risks with our clients. We have $107 billion of book equity to shoulder the body blows that come from adverse events. But that's no longer a differentiator. That's really table stakes. The market is awash with capital. What's really a differentiator is the pre-event loss mitigation, loss control, and the post-event remediation. And as I mentioned earlier, when that's integrated with our willingness to shoulder risk, I think it comes in a different flavor because it's deeply grounded in experience, in us having skin in the game, and that's where we would differentiate ourselves. But we love to partner with independent firms that create an ecosystem that's in a constant learning cycle from the massive volume of claims information that we are constantly collecting and increasingly sharing with the government. And I think that sharing with the government agencies is an important way that the collective intelligence across the entire insurance industry, not just AIG, can be scaled up even more.
Hi, Peter. Thanks for your
yes.
Sorry.
Right all the way there. Yeah. Yes.
So, quick question: of your 20,000 existing clients, I'd be interested in the percentage of those that have cyber insurance as a carve out under E&O as opposed to standing on its own. So that's part A to the question. And then part B is, if Gartner was going to construct a magic quadrant for insurance carriers, what are the key attributes that would place a carrier in the upper right versus lower left?
Tough questions. Well, I think that all of those 20,000 are standalone cyber policies. Tracy, am I right? Yep, she's nodding. I got that right. Yeah, all 20,000. So there are many, many more where that is part of other policies. And in terms of what would put you in that top right quadrant, I think it's a mixture of capacity, experience of dealing with claims over many times, and then loss control and post-event advisory services. So really a comprehensive and joined up set of services that go with the financial capacity to take on risk. Yes. Where's the microphone? Oh, there, it's all the way back there. So whoever's closest to the microphone gets it.
Sorry. Hi, Ben Goodman for A Security. My question, you mentioned Progressive and gave kudos to them with that model. I wonder, do you see that as a model that is being embraced, is going to be embraced? It seems that the technology is, this is a very dynamic space, constantly changing, that this would, but it's also got the technology inherent. Is that something that you see happening?
Well, it's an interesting case study because Progressive has had their snapshot technology in one form or other for a long time. This is not that new. And yet the adoption rate has been very slow. And it's been much higher in this country than any other country. Why? The average claim for an auto accident in this country is about $4,000. And roughly half of that's bodily injury because of the strict liability laws in this country and the very large personal accident claims. In other countries, it's the other way around. It's almost 90% physical damage. So the per claim cost is much lower. And hence the premium is much lower. And hence the fixed cost of installing devices is a much higher proportion of the cost. So it creates friction, which lowers the adoption rate. And so at this point, the amount of recognized loss from cyber may not be enough to justify the investment in technology to monitor risk on the same scale as something like auto insurance, where it's so pervasive, and in this country where the per claim cost is so high. But over time, I'm sure that's going to be the case. And as the cost of unobtrusively monitoring risk without heavy fixed cost investments and monitoring costs, I think it's absolutely inevitable that all forms of insurance will tap into monitors of various kinds to differentiate risk through time and cross-sectionally between insureds based on their more and more granular characteristics.
Yes, so similar to how a premium home insurance provider might provide non-cash benefits to their policyholders, such as tree cutting or something like that. And in light of how you sort of questioned if you are sure if you're scratching the right itch currently with your cyber insurance, what sort of non-cash benefits do you offer to your cyber insurance policyholders currently, and what would you like to start adding that you don't do currently?
I don't have an exhaustive list. I know of one that I just mentioned, something called CyberShun, which is a combination of hardware and software that our insureds can install that creates real-time sharing of threat information so that they are able to capitalize on the collective knowledge of having 20,000 other people all being attacked simultaneously that are sharing real-time where those attacks are coming from. But there are many other areas where we are offering services either of our own or with partners that can be helpful in improving the ecosystem that surrounds each of our insureds. Yes, gentleman here. Oh, who's going to get the mic first? This gentleman here in the middle as well. So if there's a mic, there's a mic.
Shall I go?
Yeah, okay. Oh, okay.
Am I on?
Yes.
Hi, Peter. Sadie Crease from the University of Oxford. I'm involved in a whole raft of research where we try and understand the relationship between risk controls and actually what we realize and what constitutes harm. In one of those spaces, we do a lot of research on insider threat, the harm that can be caused from insider threats, and what we can do in terms of risk control. And I'm just wondering if you can see a future where we might have very bespoke policies, because one thing's for sure, as we've all witnessed in recent times, the amount of damage and harm that can be caused by an insider is far greater than someone coming in from the outside, and yet as a community, we've invested very hard in the perimeters, and we're very jelly-like on the inside. And so it does seem to me that it's a space where some very interesting looks at how we would even price up a policy that actually was focused on risk resulting from insiders. Is that something that AIG has a view on?
Well, yes. I think it touches a little bit on my comment about how you get the right balance between being highly targeted to a risk versus more broad in coverage, and what are the trade-offs between those two. We saw another analogy in the way in which liability to environmental pollution evolved, and how environmental policies were carved out of general liability policies, and how when you get that sort of specialization, you have tremendous benefits because you identify risk, you shine a light on that risk, and you develop loss control that's really going to move the needle on that risk. But you risk, unfortunately, becoming myopic and not seeing how risks interact. And from a client point of view, nothing is more annoying than thinking you're covered on a risk and then reading the small print when the thing happens, oh, that was carved out. Who's been there? So I think that there's a desire for broader coverage, more comprehensive coverage, and not this sort of risk-by-risk design. But I think that there's a hybrid which says that when a risk is new and emerging and fast-moving, it deserves to be carved out, but as it gets more mature and mainstream, it gets folded in, so that we manage the growing complexity of having to insure every risk in isolation. And of course, cyber touches almost every aspect of both a person and an institution's being, whether it's in the property, whether it's the casualty, or whether it's simple fraud. There's many ways it can be a second-order effect of other risk factors. So it's hard to isolate it entirely, but it does warrant, I think, at this stage of its development, much more specialized focus. And it's interesting to compare Europe versus the US. The US, there's a much greater acknowledgement of the need for separate cyber policies than there are in Europe. There's a general complacency, I'd say, in companies in Europe that their general liability policies cover cyber. But I think they'll be finding out in the courts that perhaps they're not. And they'll be, I think, over time, adopting the US approach of adding specific cyber coverage.
This is actually the last question, but I do have to turn to the online people because there are over 100 people watching online. I think it's up to 200 now. So the question is, how do you define a balance of the possible course of securing a risk to the actual risk occurrence?
Say again?
So how do you to find a balance between the cost of trying to secure a possible risk and the actual occurrence of that risk.
The cost.
Yeah.
Cost. Okay. So, this is, again, goes to my point about not letting perfection be the enemy of the good. We're always making cost-benefit trade-offs in business, and the maximization of value in a sustainable way is understanding how the costs, the growth opportunities, and risk are balanced against each other for a company. You want to maximize short-term profit? Well, it may be at the expense of either long-term growth or risk. And as you look at the area of cyber, you can balkanize the databases of your company so much that one person can barely talk to another. We have a policy that's, forget about data, just personal access, because a lot of cyber breaches are caused by personal access. So a solution that many companies have is that your ID card only works on your floor of the building. Well, that has a huge inhibitor to collaboration in an organization. Who's going to drop by and see so-and-so in another department if you stand there in the elevator shaft, in the elevator lobby, waiting for somebody to open the security door for you? You're just not going to bother. And so there's a lot of cost, both explicit and implicit, from overdoing security, and getting that balance right to enhance growth and innovation is a trade-off we all make as managers all day long. So it's something you just need to be conscious of. There's no such thing as perfection, and to aspire to it is unrealistic. Well, this has been a real pleasure. I've enjoyed hearing your questions. I hope I've been helpful in this very important topic. Thank you very much.
Welcome back after our short break. My name is Judy Germano. I'm a senior fellow on cybersecurity and adjunct professor of law at NYU School of Law and the founding member of Germano Law, LLC. And I am honored to be here today with such a distinguished panel. You have their detailed bios in your reading material, so I'm just going to give you the quick scoop on everyone. And please feel free to read the particulars in the handout that you have. But to my far right, we have Joe DeMarco, who is one of the founding partners of DeVore and DeMarco, which Joe is really a leader in this field in terms of a pioneer. He had one of the very first law firms specializing in cybersecurity issues. So we've identified there are many needs. Companies need a lot of help and direction, and many of us are inspired by Joe as having been a federal prosecutor for a number of years in the computer hacking and intellectual property group with the Department of Justice based in New York. Joe then founded his firm and does a lot of work with companies, help guiding on many of the thorny issues faced in cybersecurity. Next to Joe is Tom Finan, who is with the Department of Homeland Security, and Tom's title is Senior Cybersecurity Strategist and Counsel. Tom is the person who helps interface with the Department of Security and the civilian-facing organizations in terms of dealing with a lot of issues, and is doing instrumental work on this concept of understanding cyber risk and working with insurers and the industry to better address the issues that we'll be talking about today. So we're delighted also to have you, Tom. Next to Tom is Cam Carey, who is a visiting distinguished fellow at the Brookings Institute and recently has become a senior counsel at Sidley & Austin law firm, focusing on many cybersecurity issues and guiding us. Cam had been the general counsel and acting secretary of the Department of Commerce and has a long and distinguished career, including as someone who very much helped us to have what Peter Hancock discussed earlier, the National Institute of Standards and Technology, the NIST framework. We can thank Cam for his instrumental work in driving that during his time at the Department of Commerce. And then to my immediate right is Randy Melch. The last time I introduced Randy, I said he's a private sector rock star. That Randy is someone who actually understands in private sector industry the technological challenges from a law and business perspective that is incredibly valuable. Randy is make sure I get this right, the Executive Vice President and Strategic Policy Advisor at Verizon, advisor to the Chairman and CEO at Verizon, and also was for many years the General Counsel of Verizon. And so Randy offers a very valuable perspective from the C-suite, the boardroom, what companies really need to think about in terms of trying to break down these divides of communication between technological concerns, business concerns, legal concerns. And that's a lot of what we want to focus our conversation on today. In terms of, as Gus Cordovella mentioned in his opening remarks and Peter further stated, it's a team sport. But one of the problems is that people don't all know the same rules of play and don't all talk, they don't know all the same referee signals. So when you have folks who are very savvy on technological issues, they may not be as comfortable talking in the boardroom or as comfortable understanding how to quantify business risk in a way that senior executives are actually going to care about. Cyber risk, and when we talk about the need for it to be an enterprise solution and concern, and in ERM terms, people may understand how to look at balance sheets and talk about risk from the audit committee of a board, but what does that mean when you then need to speak the language of a CISO and understand how that all works together? And so people come from very different perspectives of the cybersecurity issue, and we really need to figure out how, agreeing that it's an enterprise risk problem, how do we best manage that risk? How do we best understand that risk? And so I wanted to start off with you, Tom, in terms of, if you could please tell us a little bit about the work that you're doing at DHS to help get that conversation started.
Sure. Well, I'm from the government, and I'm here to help. In all seriousness, a couple of years ago, the Department of Homeland Security was very cognizant of the fact that perhaps legislation and regulation in an environment like cyber, where the risk is evolving so quickly, may not be well suited. And so we started looking for market-based ways to encourage and incentivize better investments against cyber risk. And we really zeroed in very early on the insurance market. We were aware that there was one and that they were offering policies, especially in the data breach area. And we really wanted to figure out to what extent can the market actually incentivize companies to make wiser investments against cyber risk? What are some of the obstacles they're facing in that space? And is there anything that government actually can do to help, whether it's convening meetings, whether it's bringing attention to issues or what have you? And this resulted in a series of 4 public workshops that we held, sort of identifying that current capacity to incentivize. It's a bit of a mixed bag right now. I think that the insurers are really looking for more data about the impacts of cyber events, the kinds of controls that do have a beneficial effect. Until very recently, there's really been a lack of metrics and best practices and standards, which has created some significant challenges. And frankly, they've also been very concerned about their lack of knowledge about critical infrastructure dependencies and interdependencies. And without understanding how an attack on infrastructure, for example, could have cascading effects across multiple sectors, they were hesitant to move into some of the coverage for the physical impacts from a cyber attack. And frankly, and I know Peter alluded to this morning, a lot of people who have insurance policies currently believe that their CGL and property policies already cover things like a cyber loss, and that's not always the case and increasingly not the case. So we sponsor those conversations, and we've sort of zeroed in most recently on sort of the data and analytics questions. We've established a new working group, the Cyber Incident Data and Analysis Working Group, or CDOG for short. I assure you it's the most awesome acronym in federal service today. But following on some of the speakers from this morning, we're trying to break down some of those cultural walls. So we're bringing insurers into the conversation, chief information security officers, chief risk officers, academics, and others to really start understanding the vocabulary we're using to discuss cyber risk and how we could sort of move forward together, focusing specifically on cyber incident information and the impacts of cyber incidents to figure out what sort of analysis might be helpful to a variety of audiences.
I'd like all of our panelists, if we could, to dig in a little bit more on the question of metrics. I've heard high-level folks in government say, well, if you can imagine it, it can happen. Well, that sounds really scary. It sounds like a lot of bears, Gus. But what does that mean? And what does that mean from a dollar perspective? And executives often ask the question of, how do I know if I'm investing enough? Both in terms of with my technological team, in terms of my insurance coverage. What metrics, what types of factors should be considered in that decision in terms of understanding the costs? And I'll ask each of you to weigh in on that, if you would, please.
Well, looking at me, good morning. It's a pleasure to be here. Thank you very much. I think the first thing you need to do is no company's threat profile is going to be exactly like any other company's threat profile. So this is the question you ask about metrics is very company specific. And I think it's critical to have as much as possible, an unbiased view of yourself first before you start down any of these roads, because self-deception is going to be probably the most expensive thing you're going to incur, you're going to deal with. So if you have an understanding of where your threat vectors are, what your business is, what kind of information you have, what kind of the loss of information, what kind of potential downsides there are to the loss of that information, then I think you can start to make the business type judgment of how much I'm going to spend to protect against dealing with the potential losses. I think that you have to internally also decide who you're going to trust to make the "am I spending enough" question, right? So here's where, depending on your organization, potentially your CIO is not the right person to be making that judgment, potentially. CIOs have lots of cost pressures on them in most businesses. They want to reduce costs, and as they are asked by the business people to create something, to sell something, that's higher up on their list probably than spending extra money on logging or on other attributes of a system that will reduce the front end risk. So I don't know if there's actually a single aspect of this on how you know if you're spending enough. Obviously, if you ever were confronted with the fact that you could have spent $1 more and prevented a breach, you obviously haven't spent enough. But you never get to that. Never get to that point. Coming back to the insurance question, I don't think that insurance, from what I've seen, is necessarily a very expensive attribute of dealing with the risk. I think it's actually remarkably inexpensive. And I also think, by the way, that based upon a lot of studies that have occurred, including the data breach investigations report that Verizon puts out every year, an overwhelming number of the reported breaches still fall into the category of simple breaches. Simple breaches are the ones that can be prevented by simple measures. Cyber hygiene remains the most important aspect to reducing the incidence of anything I think that any people have looked at. And so we're back to the stage of washing your hands, surgeons washing their hands before surgery at this point, as a huge factor in reducing risk. So I think that effective measures, from insurance to other ones, are not that expensive for most entities, and I think that it's a critical step to the pathway of reducing overall risk for everyone.
So, Judy, I think this is one of the questions I probably get the most about the NIST framework. When I meet with CISOs or people in the C-suite dealing with this issue, and ask, so how is it working in practice? The main criticism that I think I get is, it doesn't tell me where to spend the next dollar, and doesn't give me the tools to go to the CEO, the board, to decision makers, and say, these are the resources that I need. I think this is something that, to some extent, NIST is in the process of trying to address. I mean, version 2.0 is looking at what are some metrics that we can bring to bear. But I think the problem is that there's no one answer for every company. And a key part of the NIST framework is it's not a one-size-fits-all solution. Randy outlined a set of steps that I think, in assessing risk, in prioritizing risk, and putting in place a program to address those, and I think pretty much tracks what the NIST framework outlines for companies. I think you go through those steps, you identify gaps, you then implement a program to address those gaps. That's going to create a set of metrics to benchmark against.
From my perspective, I would say that I'd answer your question at an operational level, because I regularly am asked by clients who I'm advising on the cybersecurity space, are we spending enough and are we doing the right things? And those are very, very different questions. What I regularly see when I'm advising clients, and most of my clients are large companies or medium-sized companies, is not so much that they're not spending enough. What I see more often than not is that they're not spending wisely. Their CISOs are finally, after years of pleading for funding, getting the funding, and the pressure on them is to go out and buy these great new tools, these monitoring tools, these intrusion detection systems, these platforms which will enable them to have unbelievable visibility into the network, who's attacking it, what data is leaving, what employees are doing. But what they don't have is an appreciation of one simple fact. And if I think there's one thing I would leave you with today, it's this. At the end of the day, in answer to that question, you have to confront the reality that whether you're spending too much, too little on the right things or on the wrong things is not going to be a judgment made on you by a panel of computer scientists or frankly, the public at large. Those judgments are going to be made by lawyers. Lawyers who are either in dark robes, we call them judges, or lawyers who are in suits, we call them regulators, or lawyers that are in really fancy suits, we call them plaintiffs' lawyers, right? So the answer to the question, am I spending enough? It's X number of dollars, or we just got an increase of 29% in our budget, or look at the great 10 new tools we deployed, or it's X percentage of our whatever spend. My answer to that question as a lawyer in the field is not what is the raw number or even the percentage number, but tell me where you're spending it, why you're spending it, how you're spending it, and please tell me that you have people monitoring all of these great new tools, that the settings on the tools are actually designed to help you maximize the value of the tools, because it's nice to have, a garage with 10 Ferraris in it, but if you don't know how to drive a Ferrari, and if all you really need to do is go to the corner grocery store every now and then for groceries, do you really need a Ferrari, right? So that's kind of how I would answer the question. What are the metrics is a great question. I think you have to dig down a little bit and figure out what your legal exposure is, just as you would on the technical side understand, what your attack surface looks like, what your threat vectors are, and how secure your most critical information is.
So a lot of great points there, and it raises the issue or highlights the issue that you have to worry about not only the immediate cost of a breach, which would be outage of networks, loss of data, potential reputational harm, and other the distraction of employees, the need for all the resources to remediate and figure out even just what happened and then how to fix that. But then you have to worry about the regulatory enforcement actions that may come and the civil litigation, which seems to be coming with greater frequency. As we saw with the Anthem breach, it was within a day the lawsuits were filed. So boilerplate has been created and it's coming faster. But for a company, some of those may be more tangible in trying to assess than others. Mm-hmm. For example, reputational harm. How do you put a dollar figure on that? Can you put a dollar figure on it? Is it something for a board fulfilling its fiduciary duty of ensuring that the company has done enough? Mm-hmm. For executives who are making decisions on how big of a policy do we need, whether it's under E&O, D&O, general or cyber specific, and I want to talk about all that. But how do we even have the conversations? What are some of the questions companies, executives need to be asking?
So I want to step back a second to the broader title of this. It's cybersecurity and corporate governance. And I think there are some important governance questions at the outset. And I think some of what Peter Hancock had to say was very thoughtful and very important on this. If you look at the NIST framework, if you look at making a decision of what is our risk exposure, what is our threat exposure, it starts with the question: what are our information assets? And the answers, obviously, to some of the questions you raised are going to depend on what the information assets are. That affects reputation, it affects your risk of breach, it affects the impact of breach. But that relates to, more broadly, a set of governance questions that cut across the organization. This is, as we've talked about, this is not just a job for the CIO or the CISO. It is the lawyers, the general counsel's office, it's HR. It is really every part of the organization. Because in an information society today, everybody in the organization is an information manager. And so questions of information management, so for example, are we going to have a data lake? What data do we need for our business? What other information? What does that do to our risk exposure? What does that impact have on not just cybersecurity, but intellectual property protection, privacy, the issues of e-discovery? All of these things multiply based on your information governance. So I think these issues really begin there, and I think that helps to determine the answers to your question, Judy.
And I think that's why an enterprise risk management approach for cybersecurity is so essential. Over the course of our conversations with insurers and CISOs and others, it really was surprising to us how often we were hearing that a potential insured company had an ERM program except for cyber risk. And that was really a cultural challenge, that you had CISOs and other cybersecurity professionals that weren't really brought into the conversation because they didn't necessarily have the tools to communicate what they knew about cyber risk and its financial and reputational impacts. And that's really where I think the NIST framework can help, because the first reaction when it came out from some of the insurance folks that we were engaging was, well, I really wish it was more prescriptive than it is. But I think over time there's been a growing realization that it really does allow them to have a more forceful conversation about ERM and making sure you have the right men and women in the room so you can get to these questions of, well, what do you think, what would the full extent of damages be, in the first time period over 6 months to 12 months? And then they start to ask that question about reputation once they have an understanding of what the ramifications are. But you need that understanding, and you can't have it unless you have those professionals in the room as part of the conversation on day one.
And if I could add to that, I think events help too, right? I mean, the fact that we've had these major breaches raises the consciousness level of these events to the board level. And boards respond, and they do what boards do, right? I mean, boards have responded to new and evolving areas of the law and new and evolving threats since time immemorial. They've done that in environmental liability areas. They've done it in a whole range of areas of law, and they are responding now. And I think, again, one thing that I've seen, and this is why the NIST framework is so wonderful, is that as events have kind of thrust themselves into the public space, as you've had these major breaches and CEOs have come under fire for not being on top of things, something like the NIST framework gives the CISO a tool to go to the managers and then have that conversation, or go to the board and have that conversation. And as frameworks go, it is a framework that looks very much like other frameworks that board members are used to seeing. So I think there's a nice synergy between events and the things that the federal government are doing. Are there still companies that are behind? Of course. Are there still CISOs that are, or chief information officers that are viewed as, the tech guy who really don't talk to the CEO? Sure, but that's decreasing. Is it decreasing at a fast enough rate? No, but we're getting there. We're getting there, grudgingly, slowly, but we are getting there.
Yeah, I mean, like to that, I think there are three things that have really gotten the board's attention. First is, when a chair at Sony or a CEO at Target lose their jobs. I think when they look at what the costs of those were in terms of response and defense and liability. And finally, there's the SEC information risk reporting requirements and some of the enforcement that they're now looking at. Yeah. These get board attention. I think the tendency is still they say, okay, we want the CIO or the CISO in here on a quarterly basis to report on what we're doing on that. It needs a broader organizational approach.
Who on the board? Is it the hope? Is it the entire board? Should it be specific to? It often falls on the audit committee, who is often very burdened with other concerns. Some companies have talked about and instituted specific risk committees. It obviously is company dependent, but do you have thoughts in terms
of?
What
are you running into? And what is Verizon
Well,
doing?
so when we, over the course of the years, one of the things that I was charged with was developing how we would report cyber issues to the Verizon board. It was pretty much a three-part step. One was the step that we have discussed, which is assessing your own, your threat vectors, because that means you have to, as you then work through the process of organizationally dealing with it internally, and at Verizon, given the fact that we had three major threat vectors, we had a lot of information that our customers, our subscribers have given us, their personal information. We have a lot of information that's flowing over our networks and our critical have been deemed critical infrastructure. We also have a business that we have that helps people with their own cyber issues, right? We have a business of helping and defending other companies from cyber threats. So the fact that we had an externally facing business and the risks associated with a business, and then we also had the risks associated internally with things, it meant we had a number of different vectors that were going to be of interest to the board, or should be of interest to the board. And at least the outward-facing part of it is not going to be, no profit-making part of the business is going to be under the CISO, right? So you automatically, we're faced with a bifurcated reporting issue, because we're not going to, the person in charge of that business is not going to have the CISO report to the board about how their business is doing and what the threats and risks are associated with that business. So once you have an idea about who internally should be doing the reporting, that, in my opinion, is the best galvanizer of activity that any senior manager can have, is knowing that they are going to be reporting to some part of the board on a periodic basis. It's not exactly like a hanging in the morning, but it's pretty damn close for most people. As to where on the board, I think you're right. It's large company boards. And I'm not sure that by the way, that everything I say about a company the size of Verizon is actually mappable to the rest of the world. We have an ungodly number of people to be able to do things and resources to be able to do things, so I hesitate to suggest that it's directly mappable. But for our board, we had concentrated all of our risk issues with the audit committee on purpose. We had not created a separate risk committee on purpose, given the size of our board and the activities that they had undertaken. So for our board, the audit committee is the center place of our entire enterprise risk endeavor, which is very detailed, including cyber. And so it made more sense to fit that into this board. Now, there is a point here to be made about governance and from the board, and I don't want to sound, since I'm creeping up there myself, I don't want to sound ageist about this, but the over 80% of the Fortune 500 boards, the average age is 60 plus. Okay? And while certainly there is there's no reason that folks who are 60 plus can't be really effective board members on the cyber front, they can. I will point out that most of the folks of that vintage are less familiar with issues cyber, the internet, connectivity, and those things. As a general rule, if they've been successful in their fields, most of them have not, given their age, been successful in these fields. So there is an educational gap there that needs to be very tenderly dealt with, because the last thing you want is the sort of internal eyelid to flush down. You can still see their irises, but the internal eyelids come down, and you recognize the fact that they're not thinking about what you're talking about. So it's very important to have an educational process for a board that goes much broader than the reports that are given, because the reports will be meaningless. So you have to take the time, and we did, to educate the full board. And because if you ever have a system where you have a committee that is concentrated on topics, you got to make sure that the full board feels like it's being accurately represented, and the only way to do that is to educate the full board. So I think that's really a critical step is basic education of a board that probably this is not a natural set of concerns to have.
If I could add to that, one thing, and I counsel companies through these crises when they happen, and so I'm often talking to boards or committees of the boards and talking to people who fall into maybe a slightly older age cohort. But one thing that I think is important to recognize is that if you have good board managers who are good at making decisions in the face of imperfect information, with very short time frames in which they have to make those decisions, and with a recognition of the fact that once they make a decision, it will be probably irreversible. If you have good board members who are good at those skills, which many board members are, technologists and subject matter experts can educate them on the technical inputs they know so that they can make the good decisions. I would personally rather be dealing with a board of that caliber people who can be educated on, what it means, that a logic bomb has been deployed on the system, or that, a foreign state actor is indexing the network in the hopes of their next exploit. I'd rather be dealing with those board members than super technology savvy board members who can't make a decision in a crisis. Because when there's a cyber crisis, it calls upon the managers to exercise all of the best skills that they have, because by definition, a cyber crisis is going to be unlike any other crisis in the kinetic world. They're not going to be able to see, feel, taste, touch, or smell the effects of it. It's only going to be perceptible through intermediate steps. So I think if you have good board managers and a board that works well together, that's a very good building block.
One thing that we heard from a lot of the underwriters is that they were almost agnostic about how the ERM message actually got through to the board that included cyber, as long as it was happening. And so one example that came up over and over again was that if they had a CISO who was really trying to do her job well and communicate what she knew, if you could pair her with a chief risk officer who is more perhaps trained to speak in terms of financial impact terms, that was really the conversation that needed to happen. And if you could then empower those people with either some financial say about where risk management dollars were going within the company, that would be sort of like the perfect marriage of circumstances. So they just wanted to see the function happening for a large company. Sure, if there's a formal risk committee, that's terrific, but in a mid-size or small company where they just don't have those resources, they were looking for someone who had authority to make a decision. So very often that was the general counsel. but being able to convey in those financial and reputational terms what the technical experts knew and what they were anticipating coming given evolving cyber risk was the key thing that needed to happen.
One of the significant factors that the court looked at in deciding to dismiss the fiduciary duty claims against Target's board members was the number of briefings that the audit committee and then the full board had gotten on these issues. In your experience, how are those done in a most effective way? And is it the CISOs who can articulate the concerns within a company?
Well, I think that it is the senior officers responsible for the implementation of your program. Number one, I think that the general counsel is the other probably indispensable party to the conversation, simply because of the looming litigation and regulatory risks attendant to failure to meet your goals. So, or attendant to meeting your goals and being hacked anyway, which is probably what is also a likely scenario. I think those are probably the two, whoever's responsible and probably the general counsel are the two, I would think, the indispensable parties. You could have other people, do it as well to keep them informed. But I think that, listen, this is a panel on cyber risk. There are other risks too, right? None of us exist in a world where this is the only thing we worry about. So it has to get feathered in with all the other things that the audit committee is concerned about, from garden variety fraud to, are we going to make our numbers, to are the right, Sarbanes-Oxley controls in, to there's a big panoply of things. So it has to get folded in a regular basis. It ought to be part of the regular rotation of risks that they hear about quarterly, semi-annually, whatever it is. And obviously, of course, it becomes a topic of conversation if there is an incident, right? Then it comes to the top of the list.
And it's also not just kind of static presentations, it's also things like running tabletop exercises, right? Because once you force the decision makers to actually participate in a real drill involving a cyber incident that could befall that company, you are actually educating them at a much deeper level than just hearing kind of a static lecture. So it should include that as well.
Yeah. I'd want to know, Judy, not just the number of briefings, but the quality of the briefings and what were the outcomes and what was done about it. So, like having the Sarbanes-Oxley controls. What controls were put in place? What's done to see that people are observing them? So, that's part of the process. Tabletop's key. One of the elements, or sort of one of the stages of growth in the NIST framework is to have things be repeatable. You could get there a couple of ways. You can have a lot of breaches. I went through that in various respects as general counsel at the Commerce Department. We had our own sets of data breaches. Some of them were big, some of them were small. But the process of dealing with the management of those taught us a lot. A lot of the other emergency response things, even false alarms, taught us a lot. And so, going through those exercises will do a lot to train you how to respond when you really need to.
Underprivileged, by the way.
In terms of insuring against these risks, though, are companies going about it in the right way, and are the right people involved in that discussion and decisions, in your experience?
It's interesting. About 18 months ago, during one of our workshops, we focused on just CISOs, and we had them take us through a cyber incident that their companies had actually experienced, and we had insurers in the room. And the consensus among the CISOs was, I don't think cyber insurance is a great thing to be pursuing. And we said, well, why? And they felt that at the time, it was a competitor for their resources. Their company had a limited amount of risk management dollars, and they didn't feel that cyber insurance was, they saw it as a competitor, and they weren't quite sure of the value that it could bring. I would say over the last 18 months with very public breaches, that's changed dramatically. And you start to see CISOs who would tell us that they'd be fired if there was a major breach, saying, you know, I can now report that to senior leadership and I'm not immediately fired. And I'm then able to leverage what I know and their greater knowledge about what the cyber risk landscape looks like and be able to say, look, you need to bring me into a conversation about insurance because no, there is no such thing as perfect prevention. I can mitigate a certain amount, and then at another level it becomes impractical to mitigate, and you have to look at a risk transfer solution through insurance. Let me help you help the underwriter understand what we're experiencing and what I think is most likely to be an appropriate investment for an insurance policy. That's increasingly happening, and I think that's a positive sign.
To Peter's point that he raised in his comments, should cyber insurance be mandatory in certain ways?
I mean, to me, there are two aspects to cyber insurance from my standpoint, right? There is the risk spreading attribute of cyber insurance, which is salutary for whatever purpose it exists for, right? Someone else is going to pick up the tab. And that is a cost-benefit analysis that people can render. There's the other aspect of it, which is, okay, what do I do? What implicit or explicit standards are going to be imposed via the exclusions in the policy or via the cost for the policy that may lower the risk and therefore lower my cost? So it's an financial incentive for prevention aspect to it. And you know, it's interesting to me because when I was listening to Peter's very incisive talk, and the types of insurance that he was focusing on, either insurance that was important because it solved a risk and enabled technology, like nuclear or aviation or whatever, or insurance about everyday disasters, you know, driving, things like that. Those are all very interesting, but this is insuring against a crime. None of the things that he was talking about was insurance where you have a malfactor trying to cause the claim. And so to me, I'm not sure why that's different, but for me it feels very different on the front end aspect of this. You don't want to have a situation where the insurance, where spreading the risk leads to the moral hazard of not taking the steps to prevent it. Because there are too many externalities associated with the cyber attack here, with the cyber loss, the privacy concerns, the third parties who are affected, et cetera. So to me, it's a real balance about that. And as for whether it's mandatory or not, you know, I think I'm not sure that making it mandatory accomplishes the first part very well, right? Mandatory car insurance is important because of spreading the risks of small dollar accidents or bodily injury in the United States, as Peter pointed out. What does it do? What are the preventative aspects of it? I'm not so sure. It seems to me that we ought to be thinking about prevention when it comes to insurance. I think we also ought to be thinking, and this is something that I was going to ask Tom, we also ought to be thinking about how to, as a society, mitigate the effects on individuals, right? When you lose your identity, which is the principal way that individuals are affected, I think, and the attendant financial losses, but the whole gamut of things that we as companies buy the $100, $200 policies for parties when there's a hack. What steps are being taken to actually make it easier for people to regain their valid identity? What steps does the government take, can the government take, to issue people clean identity, you know, bona fide people clean identities right away, and the old identity is known to be a bad identity and there's nothing attributable to it anymore in any system? It seems to me that we've made it very hard to be reborn as a clean individual in our society. And that would be one thing that we could do, I think, and spend time on that would mitigate the risks to individuals and lower the overall costs from a societal basis of having breaches, because we're going to have breaches. Right. And so the question is mitigating those effects.
Yeah, and I think our focus on the mitigating effect and the incentivizing effect to make those good investments before an event occurs is definitely what's driving the work of the CDOG. So you hear in the press all the time about threat indicators and information sharing about that, and that's certainly important. But I think you get to some of these less sexy issues if you are looking at the actual historical record of what has been the full impacts and consequences of a cyber incident. Insurers want to know that because they want to understand the extent to which loss has occurred. But then some of the data points that I know the CISOs and insurers are interested for purposes of a repository are sort of what happens in that recovery period. How quickly was an investment made against the incident, and what was the anticipated benefit of it? How was engagement then undertaken with impacted customers of a company? And it sort of gets to that whole risk culture sense of awareness that the corporate entity has about not only its obligations to itself and its shareholders, but to the public that it's serving. So I think, the conversation we're having now, it's not necessarily that DHS is going to go out and build a repository for cyber incidents, but we really want to define those needs and requirements. And I think how do you help the consumer as part of that inquiry is some of the data point discussion that we're hoping to have in the next couple of months. And putting that out publicly and saying these are the data points that are of interest about a cyber incident to not only insurers, but also to CISOs and auditors and other people that have a stake in cybersecurity. Our hope is that that captures people's imagination and that they're able to either create a repository on their own or a series of repositories, maybe ISACs and ISAOs could take this up. But it is sort of a holistic and universal problem that, to your point, does extend beyond the four walls of any particular company. And they've got to look beyond sort of their own immediate risk management needs to those of the people that they're in touch with and in contact with as part of their business.
Following on, on March 19th, 2 weeks ago, the Senate subcommittee had a hearing on cyber insurance. And part of the testimony was it shouldn't just be a matter of transferring risk from one balance sheet to another, but a means of building awareness, educating, and mitigating. But third-party risk is such a significant concern for companies, and as they consider cyber liability issues, should companies, and how are the companies requiring insurance throughout the supply chain, for example? Is that something that is being discussed? Should it be discussed more? Thoughts on that?
I see it regularly. About half the policies that I'm asked to look at are not my client looking to. About half of them are my client looking to buy insurance and trying to figure out if they're buying the right policy, but half of them at least are me looking at the insurance policy of a business counterparty because the contracts require each party to have cyber insurance. And there's a lot in the press about public breaches involving consumer information. You see very little of it, but trust me, there's a lot of B2B disputes involving data breaches, cybersecurity incidents, and hacks that never gets reported and never will be reported. One, because generally you're not dealing with PII, so the state breach notification laws don't come into effect. And two, because neither business ever wants that dispute to become public. The way the businesses are dealing with that reality is increasingly businesses are requiring each other to take out insurance policies covering cyber insurance. So to answer your prior question, whether or not the government should make it mandatory or not is a very large policy question, but it's happening and the industry will grow because of that phenomenon, and also, just frankly, because of the rash of plaintiffs' lawsuits being brought against companies. So I think it is a very big part of the equation.
And are we seeing is this issue being addressed in standalone policies or part of an E&O or D&O, professional liability, all of the above? Is there a right formula for addressing cyber insurance?
I think increasingly it's a standalone policy. And there have been a number of court cases where people have tried to pursue or be made whole for their losses through D&O and general liability and what have you. And I think that, frankly, there's a significant amount of fear out there about, how big are these losses, and we better encapsulate them over here in this particular silo. And I understand that in some respects that's great because it brings attention to the topic of cybersecurity insurance and it gives it a platform. But the danger, I think, is that when you have underwriters that are really good at the cyber risk piece, you also want access to the property insurance underwriters and the other kinds of losses. So I would not want to see insurance companies losing access to that expertise. So the siloing phenomenon of cybersecurity insurance has an immediate benefit, I think, in terms of bringing attention to the topic, making the public aware of its availability. But I think you don't want to lose that ability to draw on the expertise of other internal underwriting experts that cover a wide range of loss areas and be deprived or depriving yourself of their voice as part of the cyber underwriting process.
Yeah, this came up in the Q&A with Peter Hancock. He drew the analogy to environmental insurance, and of course originally those were under CGL policies until they generally became excluded and were sold as separate policies. And the trend is to treat this that way because of the uncertainties, the sort of changing underwriting claims experience. But it did hear Peter say, I'm not sure that this needs to be treated as sort of a sectoral thing along the lines of nuclear or other areas. Not sure it's like, for example, hurricane insurance, where a general allocation of the risk sort of creates some particular public policy disparities and potential moral hazard. That this is, in some sense, like the risk that we all face of being mugged in the street. So we may get there in terms of the allocation of risk, but it's going to take more experience on both sides of the marketplace to get there.
And the risk does include being mugged in the street or possibly dropping your handbag as well, since a lot of costly cyber incidences are through just
it's a fair analogy, but you can exclude negligence.
Well, what if your handbag was encrypted? You wouldn't have had so much trouble, and that's one of the basic hygiene issues that I was trying to talk about. Yeah. You shouldn't have mobile information that you don't want to lose that's not encrypted, right? So I think that those sort of basic hygiene issues can extend to your handbag as well as other things. I thought it was interesting when I went back and went through our experience getting our last cyber policy, and I think the experience was overall very helpful, given it was a very long, the process, the underwriting process included a very long, in-depth set of discussions between our experts and the experts at the lead insurer, which I think was beneficial on both sides. One of the things I was taken with on this sort of risk spreading versus prevention dichotomy for the larger policy question is the focus of the insurer on our incident response capabilities. Because their view was that the claims experience would be cut in half if, depending on the robustness of the incident response team, right? Which I see Joe nodding his head, which is obviously very logical, right? The better you do on incident response, the lower number of claims you're going to have, and getting out there, all the kinds of things that I think public savvy companies do to try to make sure that their customers are feel protected in the event of an incident. I would note, however, there was so implicit in that is they're going to make my premium lower if I have a great incident response team, but they're not going to make my premium lower if I promise to patch all of my systems with every time that Microsoft comes out with another problem in their thing, right? Which happens to be the case. So, it's a very unusual set of the risk spreading part of it, I think, has its deleterious effects on the prevention part.
We have just a few minutes for questions, so if folks physically present can please have a microphone when you ask. And I do have one I'm going to start with that's come in electronically. I repeatedly hear lawyers say it's important to have a lawyer with expertise in cyber liability review proposed cyber insurance policy terms and conditions. Why is this necessary? What's unique about the terms in this kind of insurance that would benefit from such expertise?
I mean, I would say it's actually important to have both an insurance lawyer and a subject matter expert in cyber together, because then you're really getting right eye, left eye. And I think the products are evolving, but I'm still seeing companies, brokers bringing to companies policies which really don't quite fit the risk profile from a legal and regulatory point of view of that company, or the risk profile of that company from a data set point of view or an attack surface point of view. I mean, if you're an industrial valve manufacturer and you are selling valves to water companies, you probably are not going to have a major PII data spill a la Target or Sony, right? Now, yeah, you have employees, maybe a few hundred, few thousand employees, but your big ticket items there are not going to be a PII data breach. So I actually think you need both a good insurance lawyer who can really read insurance policies and a good cyber lawyer.
I'd put one caveat on that. It depends on the value of the intellectual property in the valves.
Yes.
Because if somebody in a foreign country suddenly starts manufacturing the same design, you've got a problem.
Right.
My name's Steve Tabachek. I'm with a company out of Washington State called CXOware. We quantify IT and cybersecurity risk. Now, what's really interesting about your discussion here is about 2 years ago, I'm standing in sitting in a crowd at a Gartner summit, and the analysts were saying you can't quantify IT and cybersecurity risk. Might as well focus on controls. Essentially, that's what they were saying.
Controls.
Right? All right. So 2 years later, all right, they're going to name us a cool vendor, and we asked them why. I said, John Wheeler. I said, why are you naming us a cool vendor? And he said, your time has come. I said, why is that? He said, boards care about three things: making money, saving money, and reducing risk. And quite frankly, he said they're tired of receiving reports from market risk, liquidity risk, strategic risk in dollars and cents, and from cyber getting high, medium, low, red, yellow, and green. What does that mean? So he said what they're looking for is a report that can show what's my aggregate loss exposure. Can you tell me what my forms of loss are so I can buy insurance? Can you tell me what assets in the organization have the highest loss exposure? All right. So I'll leave you. I won't leave you with that. I'll leave you with something actionable. Instead of giving you some commercial from my company, there's an organization called the Open Group. They're an international standards organization, and about 2 years ago, they adopted what's called Factor Analysis of Information Risk, or FAIR. So if you look up the Open Group, there's a whole curriculum, and there's an international standard on quantifying IT and cybersecurity risk. There's also a book on Amazon out by Jack Jones. He's a former CISO at Nationwide Insurance. It's called Measuring and Managing Information Risk. And it's a pretty highly rated book. So I'll leave you with that. But I really appreciate what you're saying because it resonates, because that message, how do you turn propeller head information into something the business intellectuals can use at the upper level? Thank you.
We can take one more question.
In the hacker community, there's sometimes a distinction made between hackers and crackers. Crackers being malefactors, people who are cyber criminals. It's become almost a cliche where you have someone who's very tech savvy, very computer savvy, and they find some kind of a vulnerability in a private company's servers. They go to the private company, and the private company comes back to them with a lawyer. We've had some pretty high-profile cases where people have been sent to prison for crimes that they didn't commit with malevolent intent. I'm curious what kind of steps the government and enterprise and judicial actors can do to make sure that we're rewarding people who are acting with good intent and going after people who are acting with bad intent.
I'm also affiliated with MIT in the media lab there. And I understand the distinction you're drawing between hackers and crackers, but their hack is a term of approval and a very respected thing. And there are certainly, we see some cultural conflicts around these issues. Most notoriously at MIT, the prosecution and subsequent suicide of Aaron Swartz for hacking into a computer at the university. Clearly a violation of the terms of service, and that's provoked an important conversation about what is a computer crime. When is a violation of terms of service an illegal entry onto a system or use of a computer? I don't think we fully resolved that conversation, but I think one of the interesting points that was sort of made in terms of how the president's executive order yesterday reaching hackers and sanctioning hackers overseas would be applied was a very clear statement from Lisa Monaco, the president's Deputy National Security Advisor on cybersecurity and terrorism, that this is not going to be used to prosecute First Amendment expression, is not going to be used to go after the sorts of beneficial hacking, good faith hacking that you're talking about.
Well, I would like to thank our wonderful audience, the Sloan Institute and NYU's Center on Law and Security and the Polytech School of Engineering, and especially our distinguished panelists. Thank you all for your time.
This is great.
If you could stay with us for 5 minutes. They gave me prepared remarks, but let me cast it aside and speak from my heart. So, first I wanted to express how proud I felt sitting out there in the audience, watching an excellent talk and panel sort of evolve and unfold. Excellent ideas, the depth and the breadth of the conversation, and seeing the banners of the Center for Law and Security, NYU Law, and the School of Engineering behind it all. It shows what NYU can do in this space and what NYU is doing, and I really feel proud of it. There's a lot more that you will see in the future. So at the School of Engineering, we sort of started doing cybersecurity in 1999 or something like that when I joined. We were focused on being engineers, building things, and in the case of cybersecurity, breaking things, focusing on the bits and bytes, very hardcore technologists. And over the years, we started understanding, as my friend and colleague Zach said, that security is a broader problem. When you design and implement the security posture of an enterprise, you have to do that with a deep understanding of its business, of the policies and the regulatory environment that it lives in, of the people, the culture, the awareness about security they have, the agility, the skill, etc. So security is more than just a technical problem. It's a business problem. It's a policy problem, it's a human behavior problem, and it's a legal problem. And solutions need to be designed with an understanding of doing all this. with an understanding of the broader context. And that is what we're doing here at NYU. We have students from the law school taking courses in security here at the engineering school. We have students from the engineering school going to the law school and taking courses there. We have PhD students who have co-advisors from different schools. And I believe there are great things that need to be done and will be done, and NYU would be really an exemplar of what should be done in security. So whenever I'm given a chance to sort of stand at a podium and address an audience, one thing I cannot resist doing is talk a little bit about our department. So I didn't introduce myself. I'm Nasser Memon. I'm the head of the Computer Science and Engineering Department here at the School of Engineering. And I'm very proud to be part of that department. It's the largest department in the School of Engineering. We have about 1,100 students. And we have an outstanding group of faculty and students, of course. And we focus on cybersecurity, big data analytics, and game engineering. And we do so in a collaborative manner. As you see, what we're doing in cybersecurity, in big data analytics, our faculty members are at the heart. They're leading multi-school initiatives like the Center for Data Science and the Center for Urban Science in Progress. Our game engineering faculty, again, are at the very heart of a multi-school initiative called Magnet, based on game design, games for learning, and things like that. So I'm very proud to be part of that faculty. And of course, above all, I'm proud of the students we have. They're the ones who make you want to go to work when you wake up in the morning, because you know you will see young, excited, innocent, and eager students who will challenge your thinking. And it's just a pleasure working with them. They do great things, the students in cybersecurity. They organize the largest cybersecurity competition in the world called Seesaw. If you're not aware of it, I urge you to participate and help us organize it, partner with us. Last year we had 20,000 participants from the country participating in Seesaw. The students reach out, they organize computer security club meetings every week. I urge you to come and speak to them. They organize hack nights every week where they teach each other, along with our hackers in residence, the latest sort of hacking techniques. And they also reach out to other schools and high school students around here in New York City. We organize a summer camp for high school women, sponsored by the NSF, NSA, and the Sloan Foundation. We'll be doing 3 summer camps for high school women in computer science and cybersecurity this summer. We are organizing a cybersecurity symposium for women sometime in November, in the summer as well. So there are many such activities that they engage in and make this whole the cybersecurity program at NYU really vibrant and energetic. Of course, I would be remiss if I didn't. So that was a little bit about our students and our faculty. I could speak on and on and on, but I know you were almost heading out before I stopped you. But I would like to thank our sponsors, AIG, DeVore and DeMarco, and Verizon for helping us organize this event, and above all, the Sloan Foundation. And Paula, thank you so much for being a generous sponsor for this Sloan lecture series. And this is the 6th lecture in the series. The other 5 are there on the web. Each one of them has been absolutely outstanding. And with each one, we've been increasing the number of the audience has been growing steadily. That speaks to the quality of the events. Sloan Foundation, as you know, at its core mission, aims at improving the quality of life of the American people by application and advancements of scientific knowledge. And if you think about it, that's what universities do as well. And so it's a great partnership, and we look forward to working with them. Finally, before I let you go, one announcement. So the 7th lecture series will be held on, of the 7th lecture of the Sloan series will be held on November 4th. The speaker will be Windsurf. He will be talking, who is known in some circles as one of the fathers of the internet. He's the chief evangelist of the internet at Google and vice president out there. And he will be talking about the emerging age of the Internet of Things. So please mark it in your calendar and hope to see you back there again. And thank you so much.